Weekends are always busy in Toronto's red-hot real estate market, but this weekend could run a few more agents right off their feet. That's because new mortgage rules come into effect on Monday. And if you don't have a pre-approval and in some cases a purchase agreement in place by then, well, your housing dreams could be downsized.
With this new introduction, it means that everybody who puts less than 20% down has to qualify at a higher rate. Simply put, for those buyers, it means less of a mortgage to qualify for.
Finance Minister Bill Morneau announced the changes only 2 weeks ago as a way to help cool hot markets and keep Canadian finances in check.
Our goal is to make sure that we manage the risks in the market for the long term. We're looking at the ways that we can do that, that ensure that people's investments in their home are stable and that the market is stable, allowing people to get into the market appropriately and ensure that their investment stays sound over the long term.
So what does that mean?
It's about $100,000 to $150,000 difference in being able to qualify for a mortgage. So instead of being able to qualify for a $650,000 home, you can only qualify for a $500,000 home.
And that won't just impact first-time buyers.
Move-up buyers think that they're somewhat insulated from this. That's not the case. So if the move-up buyer plans on buying, they're going to have to make sure, and they've got less than 20% down, same thing applies to them. So their affordability is going to be eroded as well because of the qualifying guidelines. So super important for them to understand that this will have an impact on them if they don't have a contract in hand today.
Which is why many banks and brokers have witnessed a spike since the changes were announced.
The ones that are trying to beat the deadline are the ones that are trying to push their price limit, right? So the clients that are sort of teetering on the higher end of limits, those are the customers that are really on the push now as far as affordability.
But the move could make it tougher or at least less competitive for anybody to get a mortgage in the future too, by changing the insurance rules for brokers.
I think what that's going to do in the secondary mortgage market, the non-bank market, is make it more difficult for them to be able to raise capital and lend money.
Eventually, smaller lenders could be forced to close their doors, leaving just the big players and the big banks to back your big buy.
Even on a conventional basis, even if you're coming up with 20% down, I think it's going to limit the number of lenders.
But this weekend, those lenders are still working, trying to get in those last-minute buyers under the wire and under the old rules. You're really going to want to check the fine print, though, because some lenders will only accept the old rules if a complete deal has been signed and accepted. So make sure you check with your mortgage broker or your financial institution. In Swansea, Cristina Howorun, City News.